Welcome back to Trading 360. I'm Sam Vardis. It's time now for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Mike Shorr, Director of Trading Education, Prosper Trading Academy. Happy Friday to you both. So nice to see you ahead of the long weekend. Mike, let's kick things off with you. Tell us about your first trade, and that is Spotify.
Yeah, so, we've been having this kind of meandering market and everything, but it's holding up. And so the way that I've been approaching things is either strong pullbacks on dips or a breakout here. Now, on a day like today where Spotify is down, it's most likely, the day's not over, but it's not going to get to my price. My price for entry is $695.78, and I'm looking at a broken wing call fly. When you get these higher premium, higher denominated stocks, I tend to go to a broken wing butterfly as opposed to just a vertical spread, mostly for cost reasons. But I'm looking at the 725, 740, 745 call broken wing fly. So you have more room in the front than you do in the back, but we're still using that back call spread to finance our front one. And if we get to that trigger price, I'm looking at 275. We should be able to buy that. So my max risk is whatever I paid for it, 275. But the reward there, because the front end being wider than the back end of that spread, we can make $12.25. So that is a 4.45 to 1 reward to risk ratio.
Okay, and obviously Spotify has been a really interesting one lately, making headlines very much on some of those price hikes, and that seems to be sort of music to investors' ears, pardon the pun, because of the fact that they really want them to focus very much on profitability, so they've been encouraged by those price hikes and also cost-cutting measures. But Rick, let's take us through the chart, what you're seeing in the technical side of things.
Right, that 240 level that represented kind of the sweet spot for that butterfly trade there. That was the level, or excuse me, 740. That represented that level here that I highlighted on my own chart here. Highs and then subsequent highs once again. So that would be the breakout area to consider here. You could also draw this trend line here going down and connecting the subsequent high. Not really the strongest trend line yet. Ideally, you would want to connect 3 or more points here, but it is starting to give you a sense of the boundaries here that you might expect to see. We have our long upward sloping trend line here in white that encompasses most of the year's trading activity, in contrast with our shorter term downward sloping trend line that we have started to establish after these highs. So today in the shorter term, though, we are pushing below our moving averages, yellow 21-day and orange 63-day exponential moving averages right on top of each other near that level around 690 or so, but prices falling through them. So that means then perhaps one level to be on the lookout for is our green line here. These highs here represent similar highs. It was a little bit messier here, but once again, that was a general high point near about 650 or 655 or so. Once again, lining up with the boundary from our triangular trend line there on the lower edge. So if we were to also consider our other studies here, we can see that volume profile shows that the area where we are getting rejected is the lower edge of this volume node near about 700. So 700 to 720 or so would be an important area for price to work through on its way to possibly trying to reach new highs. To the downside, though, another heavier volume node just below our green line that we mentioned near about 650. 630 is where that heavy volume roughly accumulates. That's also our -1 standard deviation channel. Could be a notable low point to watch out for.
All right, and next up we've got Costco. Mike, interesting one, obviously, given the value-hungry consumer right now. The sort of consumer staples have been a really big focus of this earnings season, obviously reporting quite late in the session next month. But how are you looking at this trade?
So, I look at it in a couple ways. That clearly they do have exposure to China, and so the tariff stuff comes into your mind, but also it's a relatively defensive stock with growth potential, and so when it traded off those highs, I was just kind of like, oh, that's kind of weird, And so, but it's still holding one of the measures that I use, an ATR trail stop. It's still holding above those levels, and it's holding above the lows since, since they paid out that dividend, and then it went back up. Now it came back down. And so it's kind of a combination of a safety play, but yet with some growth potential.
Okay, that's a good look at the trade. Rick, what are you seeing on the chart for Costco?
Yes, so this one, you could argue that there's some general range boundaries that we've been stuck in here with some notable excursions to the upside and the downside. So to kind of think about this, first we had a gap down here. That represented our pink line here near about 1020. Price did get stuck there for a while. We pushed above it twice here, but it was kind of a rug pull then, a kind of a tough situation on earnings that drove price back down below that ceiling that it had once reached above. Then we had another area here, our red line, our breakout point here. We fell below it on that earnings event here. Things got really choppy around that general area too, but then supportive once more during this period and again more recently. So 970 as well. Finally, our green line, 925. Low point here, low points and high points. Things were messy during the tariff news shock event as well, but finally settling down there near 925. So 925, 970, and 1020 are some horizontal levels that stand out. We can also see, if we were to look at our moving averages, our price action has bounced around that general area of our 252-day moving average multiple times here during the year. So an important moving average to keep in mind here. The longer term the moving average, the more significant it is if it is eventually breached here. So if we were to examine where the volume lines up with our price activity, right now price is stuck at this node here near about 950, lining up with our -1 standard deviation channel as well. So this would be a supportive area that traders would hope to hold on to if they were bullish. But then to the upside, 981 is where the volume really gets heavy. That's the point of control. That would be just above our red line representing our breakout level at 970. So there's some work to do to the upside still for the bulls.
Okay, back to you, Mike. I mean, how would you trade Costco?
So again, we have a more expensive underlying, and so I'm gonna look at another broken wing butterfly. So I'm looking for what's called an inside bar trigger at 960.51. If we get there, then I'm looking at the regular September, so September 19th, the 985, 995, 1000. So a little bit tighter on this because it's a less volatile stock. You should be able to buy that for about $1.60. And so that's our max risk. And then our max reward is 840. And so you can make 5.25 to 1 on this thing. So if we do get that breakout to the upside, there's a really good reward to risk up there.
All right, and last but not least, let's talk about Datadog, Mike. What's your trade for this one?
So here I was looking at an hourly chart for a breakout today. Now, with the markets down and DDOG being a tech company, it's down today, so it doesn't look like it's going to break out. But I was looking at a price of 141.65, and then a relatively simple vertical spread, the 43.46, 143, 146 cost spread. You should be able to buy that for about $1.25, $1.35. That your max risk is whatever you paid for it, and then your max reward, depending what you paid for it, somewhere between $1.75 and $2. And so you're looking at about a little bit less than the other ones, but about 1.5 to 1.
Okay, looking to recover there, but today it looks like a downward Datadog. Sorry, I had to do it. Diane King Hall would be very proud of me. She likes the puns. Rick, take us through the chart on this one.
Well, trading all kind of depends on your time frame and your perspective. So why I'm saying that is by one measure, we had an interesting breakout here. You can see that price pushed above this repeated high point and our orange 63 EMA, our yellow 21 EMA, all that was coming together in the low 130s. highs. Now we have gotten stuck, though. If you were to think back even a little bit further here, you could draw this trend line connecting these highs. That's about where we topped out yesterday and today, near that 142 level or so. You could also draw an accompanying parallel line to the downside to give you some sense of potential boundaries here. And you know, to kind of go back even further, then we often look back on our charts here to find old gaps and notable high points here. So once again, we have several horizontal lines to consider. We had this sideways range period here, our light green and dark green lines, 120 to 131. We had an interesting example of a head and shoulders type pattern right here at these highs here, just a kind of a nice example to point out here. But then price hit lows here and highs here. That gives us our red lines, 136 and 152. Then you can see these levels have come back into prominence many times during the trading year here to kind of give us these most close boundaries here. About 131 and 152 would be the important shorter term range to watch out for. When we were to look at volume, we can see that we are stuck right now at this point of control, the heavy trading activity area. It also lines up with our +1 standard deviation channel. So once again, an extra emphasis on this level near 142 as a potential congestion area here.
All right, guys, thank you so much for joining us today. That is Mike Shorr, Prosper Trading Academy, and Rick Ducat. Thanks so much for breaking down those three stocks.